Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back. How are you?
I'm very well, Michael. Thank you for having me.
Okay, good. All right, we've got a question stacked up already for you in the shout box. You mind if we hit that one first?
Not at all.
Okay. All right, it's from Nevada, and he wants to know about the S&P market, the SPY. He wants to know if you think that the SPY is going to tag the 200-period moving average, and if so, can you give him an idea when you think it may happen?
Well, we still have a while to go before that happens. I do think that's really possible, though, in 2012. However, I think we're probably still quite a while away from that. I would probably say at least a couple of months.
Okay.
Right now, this is options expiration. Going to just get a lot of choppiness into tomorrow's expiration. And then after that, we just have to see how these lower tops are made in the market. Once we take out the April 10th low on a closing basis, then we'll have a better idea of when that could get to the 200-day moving average.
Okay. All right. Well said. Are you shorting it now? You think one more bounce before we short it? What's your thoughts on that?
Well, I'm still holding. I'm short the Qs still.
Okay.
I've taken some profits last week on that. I'm still holding half of my position in that. Right now, I'm looking to sell again to add more shorts to this market. But I do think that we're probably have to wait a little bit of time, sometime maybe towards next week or even the week after. It's really all about the pattern. But the areas that I'm looking to sell short would be in the base metal sectors, anything commodity related like steel, copper, iron ore, anything in that area.
Okay. We're going to talk about another symbol I haven't seen before, TCK out of you. What's that?
Yeah, that's Tech Resources. That's a stock that I'm looking to sell short. It's had a little bit of a bounce here over the past week. I think it can get up to that 200-day MA around $39, but I'm going to giving my traders an alert to go ahead and sell into that level. That's where the stock actually broke down. 200 days should be pretty good resistance should the stock trade up to that area. But this is another one like Freeport-McMoRan that in that same sector where it can be sold short on any decent bounce up.
Okay, all right. Now, the U.S. dollar index is something that's got your attention now. What's going on there?
Always, Mike. I'm always watching the dollar because the one way that this market has stayed afloat has been for the institutions to sell the dollar once the opening bell rings at the New York Stock Exchange. Even today, which the Dow is down decently today and the market's having a little bit of trouble, but if you look at the dollar today, right around 9 o'clock, 9:30, when the opening bell rings, you'll see how this thing just gets trampled, and they just plunge it every single day. And then the markets get a big rally. So that's something I think I just want to alert your subscribers to, the intraday games that go on each and every day with the dollar. Once the dollar opens, I shouldn't say the dollar trades 24 hours, but once the markets open, the dollar has a tendency to get sold off sharply, and that inflates the stock markets right back up. And everything is keying off the dollar these days.
Yeah, it looks like it's trying to find some support somewhere around that 79.50 area. Do you see that as being significant at this point, or just a short-term level that everybody's buying off of?
Yeah, I think right now it's a short-term level. The dollar has upside to around the 80.60 level, but if it does fall below the 79.50 level on the U.S. dollar index futures, you'd have very good support around the $79 area. The spot price also looks pretty good around 79 as well.
Okay, so let me get it straight though. But overall, I mean, as we go forward, are you leaning up to the bearish side or the bullish side of the dollar?
Oh no. I'm gonna stick with the bullish side of the dollar right now.
Okay.
So I'd be more inclined to buy the bounces, buy the support levels on the dollar, as I think the dollar is going to remain strong throughout the rest of 2012 into the fourth quarter.
Okay, all right. The rest of the year, that's okay. That's quite the statement. All right. The other part of the markets that you're looking at, you're thinking about, is this the one that you woke everybody up to as far as a really good stock to watch for a tip off for what's going to happen with the equities. Is this JPM?
Yeah, JPM is. It's really been a good barometer for the stock market overall. When the stock goes up, the markets go up. When the stock goes down, the markets go down. Right now, JPM has given us a nice bearish pattern on the daily chart, and I think probably sometime next week, if the pattern continues here, it probably can be sold short and it's not a big short play. There's going to be a lot of support around the 40, 50 to $41 level, but nonetheless, still a decent move if JPM drops about 2 points. So that could cause some damage on the charts overall in the major indexes.
Okay. What other markets or stocks, or I should say ETFs, are you looking to trade?
Well, right now, if you look at the IYM, which is ticker symbol is the IYM, that's the Dow Jones iShares Basic Materials. I think that's something that can be sold short as well, around the $71.50 to $72 level. I think that could also be played by using the SMN, which is the ProShares Ultra Short Basic Materials. If you want to take a little bit more risk, you can buy that. That looks very attractive once the IWM gets to around that 72 level. So that's something that I'm eyeing for a possible trade.
Okay, I'm looking at it. It looks like it's got nice places to buy, the SMN. I like that. All right, then that leads me to believe that you're thinking interest rates are going to make a move here soon. All right.
Well, to tell you the truth, I've really shied away, if you've noticed lately, from the bond trades.
Yep.
And the reason that I've done that is the twist, the Operation Twist, is going on by the Federal Reserve. They're obviously trying to keep rates low, and I just don't think it's a true market right now. I've really lost and I've traded bonds very successfully for a long, long time. Right now, I've stayed away from it, so I'm waiting for a more significant setup. I'm trying to combine it with the cycles, and then I'll be looking at some bond trades down the road via the TLT or the TBT or something like that, the IEF. But right now, I've really just shied away from the bond trades recently.
Yeah, they're really hard to get a handle on. I'm looking at the TLT right now, 117 on this one. It had a nice gap up. It was about a week and a half, 2 weeks ago?
Yep.
And I'm wondering if we're going to turn around and fill that. What's your thoughts? Or you think maybe that's the beginning of another leg up?
No, I think it's possible to come back down. Right now, I'm going to say that the TLT is probably at the higher end of the range right here. If it can consolidate around this level, 117, for maybe a week or so, then it has a chance to get into the 120, 122. But I would not be a buyer of the TLT at this moment.
Okay. All right. Let's to come back full circle here, back to the S&P market. We've had some people come on the show who are cyclical analysts, and you're a great cyclical analyst yourself, who are looking for this the classic sell in May, go away. I've got some guys that are on the social network looking for a rally, could take us into, say, mid-May, and then a really strong drop into, say, the summer months, so July-ish. I wanted to bounce that off of you and see what your thoughts are in regards to that pattern possibly coming to fruition.
Well, I think anything's possible. I don't actually have that pattern set up. Actually, my cycles are not running that way.
Okay, what are they running?
What I'm thinking now is that we've put a high in already on April 2nd, and what we'll do is we'll make a series of lower tops. We could even make a double top, but I think we're going to make some lower highs, and we'll probably go lower ultimately. And I don't think it's going to be a hard sell down. I think we'll go lower into the middle of the year, and then they'll probably try to the institutions will try to buy it there. But it's going to be a trader's year. This is going to be choppy and turbulent. As I said on your show last week, the upside money, the easy money on the upside has already been made.
Okay, so really short into the strength, and you've got some key resistance area on the S&P before we take off here today?
Well, right now, I mean, the benchmark level that we could look for is 1422, which is the April 2nd top. But prior to that, I think it's really about pattern. Even 1400 is going to be a very, very good level if we get there. So if 1400 is hit and is the right pattern, I think maybe the market could even be sold short there. But I'm a little uncertain exactly how this is going to play out. I really want to see a significant pattern on the charts in order to sell this thing.
Got it. All right, give everybody a way to reach you so that they can go into your trading room and watch you trade.
Sure. Come on over to InTheMoneyStocks.com. We have our 7-day free trial for chat members. You get to see our computer screens. You'll also get to hear us throughout the day on any trade setups that we're doing. Also, watch our research center and get our nightly videos and our trade setups each and every night that we put out. So It's just a ton of information. Give it a shot. Once you come in, I think you'll be happily surprised.
Thanks so much, Nick.
Thank you, Michael. Have a great day.
You too. Everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com.